like to talk about several things, not so much exactly what's going to make gold or silver go up or down, but just questions that are coming in. I mean, there's never been a time in my history, 42 years of doing this, where today I've had two conversations with foreign investors, one out of Luxembourg and one out of Poland area, and you're seeing the concern today about the value of the dollar. And people are wondering why Americans just keep going, seeing that we're running the biggest deficits ever under Trump, higher than Obama, higher than Bush, higher than anybody. And yet we sit here, see that the economy's growing faster, the numbers being adjusted. We're seeing investors in Europe talk about liquidating US dollar investments like 30-year, 10-year, 100-year treasury bonds and treasury notes and even treasury bills, and what that would do further to the dollar. The dollar is close to finishing the year, its worst drop in many years, much worse than Obama or Bush ever had under this year. The US dollar's down over 5%. Historically, gold should be up right now about 40 or 50% and not 11 or 12% that it is up. We're in a strange world, but the questions that keep pouring out of Europe, what are Americans doing about money coming out of the banking system and going into cryptocurrencies that are also fiat cryptocurrencies? There's nothing wrong with cryptocurrencies. I'm not saying that, but you don't put money in it that you can't afford to lose, because there's nothing to back it, nothing to guarantee it. We've seen over 840 of them fail already that don't get in the headlines. You only read about the big ones that are doing well. And then we even hear this week that Bitcoin has 4 million Bitcoins of the 21 million disappear. Now, and yet the price goes up. And you look at this and try to figure out if money keeps coming out of banking system and going into a fiat cryptocurrency system, then how long would it take till the banks have to start printing more money? And then the US government continues to print money and produce the biggest deficits of all time. And then there's nobody in Europe or in America that wants to buy our debt. The Fed can't even do it, and yet they'll probably raise interest rates again in December because they can. But remember, these are 0.25% rate hikes. They are what they are. They're not significant rate hikes at this point. So you look at all this, and your still best advice is that you diversify. Yes, you invest in a hot stock market. Yes, you do. And yes, if you want to play the crypto market, you take 1 to 5% of your portfolio you can afford to lose. Remember that nobody guarantees it, nobody backs it, but you're still seeing significant increases. Then you go and you invest in your metals. You may have real estate in your portfolio. You may have art, if you're an art expert. You diversify, as we're told in Ecclesiastes 11:2, to spread our wealth into different areas, because there will be disasters come upon the land that will affect different investments different ways. That's just wisdom. That's wisdom going back thousands of years. It's just as prevalent today as it was during the time Ecclesiastes was written. So don't get carried away and put all your money into one basket, because I can assure you there are huge risks out there in these areas. And yet we've had a 6% up year for silver, 11 to 12% so far with a month to go for gold. And you act like gold's a bad investment. I really believe, as I sit here and make a prediction, that 2018 will be the best year for gold for over 6 years. We've had 3 good years up, but they've been 5 to 12% per year, which is still a great return after the 3 years of gold going down. But the other thing to remember, and this is for y'all that are liquidating gold and silver and throwing it in the stock market since 2000 has gone from 16,000 something to right at 24,000 today. It's gone up about 80% in 17 years. Gold's gone from 256 to right at 1,300 for over 500%, even after the third drop during the years 2012, 2013, and 14. So we see gold because of what's going on in China. The central bank's buying gold like it's going out of style. Shortages of physical gold in Asia and Europe. And the United States is the best place in the world to buy gold and silver today because the premiums are lower and the waiting time on most items is immediately. So that will change, and it will change quickly, in my opinion, because the cat will get out of the bag during the next year, and you will see gold and silver make some very, very significant moves. So all I'm saying is you need allocation in that area. You choose the allocation. You and your financial advisor choose the allocation, but get allocated into gold and silver. Don't sell it. You need to be buying it. A lot of people are doing the exact opposite of what they need to be doing. Once again, you have all these different investments in there. So we'll follow that as we go. And also remember, we're entering a period, January, February, March, that have always been good for metals, even in down years. We've had a lot of clients buying January and selling May for years and years, and have yet failed not to make a profit, not 1 year, even the down years, because the down prices came later in the year for different reasons. So anyway, if you need to reach us, you can reach us at 800-247-2812, 800-247-2812. We can help you with a self-directed IRA, rollover, help you get a custodian. We can function as your broker and representative, but not the custodian. We can also help you do that. We also now have people that are buying common rare coins because the premium has come way down over the last 17 years to where now the premiums are 10 or 12% for MS63 coins when they were over 100%. So we're getting back to where we are selling more generic MS63 St. Gaudens and MS63 Liberty. So we'll even talk to you about that, but we still don't like the real rare coins. We just don't see them. We've been right for a long time on those. So give us a call and you can talk to Dan or Kathleen or I, and we'll be happy to answer your questions. With this week's Precious Metals on the Market Update, this is Tom Cloud signing out.